Hi, everyone. Welcome to the ACT Tech Summit 2021. We're so excited you're here. I'm Ginny Winkworth, Program Manager for ACT. Ron Berg, ACT's Executive Director, and I are really excited for this two-day virtual conference. Pre-pandemic, ACT held 2 in-person meetings annually. However, the events, obviously, of the last 18 months changed that a lot, as we know. So we've moved to a virtual platform for now. But interestingly, even though we moved our last couple meetings virtual, we've also realized a real positive effect from that. That's really the ability for us to reach a wider audience. Being able to bring sessions to you virtually means that many of you who might not have had the ability to travel to a destination can join us and experience the valuable content that our ACT meetings have. So it's not to say we won't be offering our in-person meetings again, because we're anxious to do that as soon as we can do it safely, obviously. But in the meantime, our virtual conferences have really proven to be a win-win experience for everybody. So we hope you enjoy that. So first, a really quick but very grateful thank you to our ACT supporting members. We hope you were able to see the list of them that was playing during the video that we had prior to the opening. ACT has over 65 supporting members, and that's comprised of insurance carriers, technology vendors, industry associations, consultants, and user groups. And their reason, they are the reason we're here today. I mean, their support is what allows us to present this tech summit and truthfully to do all that ACT does. From our work groups who create resources to help independent agents embrace technology in their workflows, to our bi-monthly ACT newsletter, which is an e-newsletter bringing information on industry trends, technology updates, insights from thought leaders, to the numerous educational webinars that ACT produces. So none of that would be possible without the support that's provided by our supporting members. So if you didn't have the chance to see their names during that pre-session video, please, when you have a small break after this session, visit the ACT supporting members link that's at the top of the virtual platform website that you're on. Each of their logos is there. They're interactive, so you just can simply click on any of the logos. It'll take you to their website, and you'll learn a little bit more about them. So we'd love you to do that. So let's get started on our first session. We have a great panel discussion on moving forward post-pandemic and what new ways to press this business might be coming in the next several years with that. So quick mention that all attendees are muted, but we do welcome your questions. So please use the Q&A button at the bottom of your screen to submit your questions. We have set aside some time at the end of the panel discussion to answer the questions. So join us at the end of the session. Our panelists are going to be happy to answer your questions that you input during the session, but also anything that comes up during that Q&A portion. So, so I'm pleased to introduce Ron Berg, ACT's Executive Director, who is my fearless leader, and he's going to kick off the first session.
Thanks, Ginny. Hey, everybody. I am excited to kick off this ACT Tech Summit with this particular really insightful discussion on where the industry may be headed post-pandemic. There has been pretty much endless discussion on what the pandemic has forced or enabled or perpetuated. But today we'd like to use the insights of 3 industry leaders to discuss not just where we are in October of 2021 and what responses our industry and government has enacted, but also what springboards, if you will, are in place to move us forward and what that might look like. But before we do that, let's meet our panelists. We'll start first with Brady Kelly of the Wholesale and Specialty Insurance Association, also known as WSIA. Brady, it's great to have you with us today. You've held a strong presence across a variety of roles within our industry. Would you just take a minute, please, to share your current role within the WSIA and some of your background?
I will. First, thanks for having me, Ron. Bit of background on me. I started my career as an accountant. I got my accounting degree. I'm a CPA. spent a few years at a public accounting firm, and then joined the NAIC, the National Association of Insurance Commissioners. So at the NAIC, spent a number of years in various roles supporting the financial solvency committees, a number of those kind of national projects that really kind of led me to the WSIA. I joined the association in September of 2011, and am just north of 10 years there. So executive director, overseeing all of our member services and programs that we provide. So thanks again for having me, Ron.
Absolutely. Welcome. So next, I'd like to introduce Reid Holdsworth, CEO of Ivans Solutions. Reid has been involved in many different roles across our industry. Reid, welcome, and please tell us more about your current role within Ivans Solutions and more about your background as well.
Yeah, sure. Thanks, Ron, and happy to be here. It's going to be a great topic, and looking forward to it. So thanks for having me. So Reid Holdsworth, I'm the CEO of Ivans. Been in the industry for a lot of years, like Ron said, been in a lot of different roles. Really, I'd consider myself serial entrepreneur. Started my first business when I was a little kid, and fell into insurance many years later, which I was a broker, and kind of learned the ropes of insurance at that point. Then went off and started my own agency, which we franchised, and then became a technology company. That said, former founder and CEO of a company called Tech Canary, which we then sold to Applied Systems, which I've been at Applied now for a couple of years. I sit on the global executive team of Applied, as well as now I'm CEO of Ivans. So Ivans, for those that don't know, Ivans today connects almost 500 carriers down to 32,000 agencies. And really kind of we're in the connectivity business, working with all the agency management system vendors and what I call distribution platforms, and helping with connectivity within the industry. So having a good time. It's a good time to be in insurance technology, that's for sure. Things are finally changing. So happy to be here and happy to talk. Thanks, Ron.
Awesome, Reid. Thanks. So last but not least, Chris Cline of Westfield Insurance. Chris has been with Westfield for over 27 years now in a variety of roles. Chris, thanks for being with us today. Could you take a few minutes and just talk about your current role as Westfield's national agency distribution leader and also some of your other background?
Yeah, I appreciate it. And certainly like Brady and Reid, I appreciate the opportunity, Ron, for getting to be a part of this conversation. It's always fun to talk shop about some really cool stuff with highly respected peers in the industry. But yeah, Ron, as you said, I've been at Westfield, so homegrown largely. Westfield, since day one in my career, over the last 8 years, I've had the opportunity to lead agency distribution for our organization. So if you think about all things that carriers have to deal with to partner with independent agencies, other than pricing and underwriting, it likely works through the team that I'm fortunate to work with. So contracts, licensing, connectivity, a lot of the other stuff that comes along with what we do. As you mentioned, I've been here for a long time. Even though I was sort of born and bred here, I started off as a graphic designer. So I have a fine arts degree and began my career on the creative side of things. And had an opportunity to move from graphic design to sales to training, compliance, leading an underwriting region. And then again, over the last 8 or 9 years, have been on the distribution side. So it's been a really fantastic and diverse career, even inside one company, and the opportunity to meet some great folks. On the human interest side, Ron, I know you and I both share incredible passion for guitars. That's the stuff behind me on the wall here. And apparently we share an incredible passion, as does Reid, for the same hairstyle. So leave that for another day if we have to. But it was painfully obvious that Brady's going to get a haircut if we stay here any longer than an hour.
I wouldn't call my hairstyle a passion, but at the same time, yes, we share it. Thank you all. And as Ginny mentioned earlier, everything ACT does is enabled completely by our carrier and vendor supporting partnerships. And the three gentlemen that you see on this panel are supporters of ACT, and we greatly appreciate it, guys. It's great to have you here. So let's get going. Let's talk about acceleration. And while technology and agency workflow options were certainly evolving prior to the pandemic, this remote and now hybrid work environment has forced on all of the the stakeholders has clearly driven an accelerated change, like it or not, right or wrong. How is this path going to, you think, evolve in the future, given what has been forced, probably a good thing, till now? Reid, I'll start with you.
Yeah, I would say that, as we all know, everybody's been talking about this for a lot of years, and carriers, wholesalers, you name it, everybody across the industry has been going digital, right? And investing in all these digital things, if you will. But now, because of the pandemic, it's become less of a nice to have and more of a have to have, right? And so, which is exciting for all of us, and especially being a former broker on the distribution side, I really foresee a lot of these, what I'll call kind of issues, problems, to being solved long term. And so now it's everybody's really hit the throttle in a number of ways, as we've all gone remote and whatnot. We've seen it a lot on the Ivans side. Transaction volume is massively up. Carriers and everybody else is calling us for more and more connectivity, and that's all becoming from demand within the industry. And people have been demanding this stuff for years, but sometimes it fell a little bit on deaf ears, and this stuff's really expensive and it takes a long time. The good news is because most companies have been working on this and have had a plan over the last few years. They're kind of in it already, and now they can actually but they didn't fully execute, I guess. Now they're saying, hey, let's fully execute on this because it's a requirement moving forward. So it's good. It's all good things, but it's not cheap, and it does still take time. So we still have a ways to go.
That part didn't change. So Chris, from your industry carrier standpoint, what's your lens?
Yeah, the theme on this, and Reid hit on this a couple different ways, and I'm going to steal directly from our mutual friend Chip Basioko over at trustedchoice.com. We interviewed him on our podcast, and he hit this straight out of the park with a word called the Great Accelerator. And so, building upon Reid, there's not a lot of net new things really that are on anybody's strategic roadmap over the next few years, but the pace by which they're being addressed is really unparalleled. And some of it was certainly survival. I mean, we immediately had to figure out a way to collaborate, connect with our coworkers, our distribution partners, and our vendors. So it accelerated phenomenally how much work was going on in this space, just to be able to talk to each other and to share information and ideas. And so that pace probably isn't going to slow down. And so from inside our world, we've seen things, like Reid mentioned, this stuff's expensive and it takes time. Connectivity is hard, but for a company like us, things like building out our API infrastructure to connect to more platforms and different types of agencies, they were very much on the roadmap. They were being worked. There's no two ways about it. But immediately double throttle down. I see Reid's got some hot rods, and I know he's a hot rodder too. So I can share that passion and use that analogy, but it has gone through the roof, and great deal of success. And so the number of partners we're able to connect to, just again, never being in the same room with anybody has been really great to observe. But as I think about this, I think a few months ago, we thought this might be a post-pandemic conversation, but here we are, all of that set aside, we're still in a pandemic world, but at some point down the road, this hybrid approach has got to become real. And the thing I think about, I don't know how common it is, but is what will the human do to try to insert the human part of the experience into an incredibly and almost exclusively digital and virtual experience now in every facet of their life. And so if we do get to the point where being in the same place at the same time is real, how will that normalize is a question that I think we should be considering or thinking about.
That's a great way to wrap up that thought, Chris. It's because I see that the great value that we bring the IA distribution is really the opportunity to marry that digital handshake with that trusted advisor role. And I really think that's where we'll have opportunities to deliver ongoing. And it has been that way. It's just that we're in a different lane now and accelerating differently, which is phenomenal from that standpoint. Brady, let's I'd like to single you out based on your industry lens, your long-term industry lens, NAIC, NAPSLO, WSIA. Back up a little bit and talk about how the industries responded to the pandemic, maybe how certain regulations were relieved as burden from the policyholders because of the pandemic, and how some of that might transpire moving forward. Could you share your insights on that, please?
Happy to. I'd start by saying that, our members, their clients, their trading partners, brokers, agents, everybody, we were all in uncharted waters for a while. And I think communication through all of that was key. I think what Reid said, we had no option but to execute on that. So, the effects of the pandemic on insureds, their business operations, the ops of our stakeholders, they varied in many cases quite dramatically. So we saw some insureds conducting business in as standard a manner as possible, little impact, and you saw some that were dealing with unimaginable business and financial disruption. So our members really had to do a lot to balance all of that. And I think they did balance that extremely well, as they customarily do in the wake of a catastrophic event. Doing their best to respond to the needs of their insureds and business partners, and keeping the lines of communication open were key to doing that. Back to your point about, how did regulators respond? There was a lot of regulatory response to this. Early March of 2020, the states began issuing a number of bulletins, regulations, a lot of guidance outlining, what accommodations does the industry need to provide to the policyholder, given the disruption of COVID-19. And, some of those states offered accommodations to the industry as well, filing deadline, grace periods, operational impacts, that kind of thing. Ultimately, 47 states, plus the District of Columbia, issued some type of guidance, moratorium, bulletin, you name it. Those things range from relaxed due dates of premium payments, grace periods for renewals, late fee waivers, penalty waivers. Interestingly, expansion of auto coverage to allow for personal vehicles to deliver food and medications and other essential services and things. So the states did a lot of things for several weeks there, March through April, and it was good for, I think, the policyholders in a lot of ways, great for the industry in a lot of ways. But man, the states regulate the business and they all do it a little bit differently. So, there was not a ton of consistency in how a lot of that worked, and they were all developing so quickly. So the industry became very focused on monitoring what was happening, how could they ensure compliance across all the states with all the things that were occurring. And, what I would tell you in retrospect, as is customary with this industry, in the wake of a CAT event, I think it did an extremely fantastic job. Some of those regulatory relief and accommodations to the industry, I think will stick. The NAIC is looking at ways to keep some of those things in place. Things like, electronic versus paper payment options in some cases, tax payments, fee payments, elimination of wet signatures, notarization requirements, things that I think will make the business and processes improve in general, which is great.
Cool. So I'm going to stick with you, Brady. And the next point, I want to springboard off the platform that you built with that response. Thank you. And it isn't connected entirely to a pure tech standpoint, as our overall summit is, but still it impacts all agents. I think about and I hear about business interruption insurance and the impact of the pandemic there. Can you talk a little bit about that and the growing impacts to businesses from an availability, cost standpoint, and how it's aligning with the different peril coverages?
Sure. We're a business that has an example of that I'll share in a bit. But I'll start by saying, there were some really troubling business interruption legislative proposals that were introduced pretty quickly after the start of the pandemic. Looking back now, 11 states and the District of Columbia, they filed legislation, as did our U.S. Congress, which, we, all the national trades, vigorously opposed. I'll explain that. I mean, we opposed those bills because they called for retroactive coverage for pandemic-related disruption, government shutdowns, those kinds of things that were simply not covered by policy language. They weren't contemplated in the underwriting, certainly not contemplated in the pricing of the product, and that retroactive application was completely inconsistent with constitutional and contract law. So we worked hard to oppose those things. The good news is we weren't the only ones. I mean, the NAIC, INCOIL, the International Association of Insurance Supervisors, the Department of Treasury, a number of members of Congress also opposed those retroactive approaches. We continue to work through some of them, but right now I would tell you, I don't think we're at risk or of high concern that any of those will move any further than they have at this point. But your question is more about availability and affordability of certain coverages post-pandemic. No doubt the industry is evaluating policy language, governing BI coverages, virus exclusions, all those kinds of things. And from what I hear from our members, it's the coverages for things like event cancellation or perils that have a communicable disease component endorsement that are most impacted. And that's really where I get to, our example. We're an association that hosts some really large member events throughout the year. And we had an event cancellation policy last year that actually, it had a communicable disease endorsement in it. We can't get that now. That was a policy we purchased in 2019. We went through 2020 and can't find that coverage now, but for good reason. I mean, the impacts of that pandemic were simply not contemplated, again, in the underwriting or pricing of that coverage. So today there's little to no. I say little because I don't know that there's no, but there's very little to no industry appetite for that kind of risk. There have been a number of pandemic risk proposals. You've heard about PREA, that legislation in the House, which we continue to monitor, engage in where possible. But I think the priority of a federal pandemic proposal, a federal solution to this, while I think it was a hot topic in 2020, it's hard to tell what the real priority for that is right now. So I think the future of pandemic risk is to be determined.
Okay. Well, thanks for that background. I think as Reid and Chris have both alluded to from a tech point standpoint, when it comes to this, the industry really did work together to look at the areas of concern that were emerging, and WSIA, Big I, others that you mentioned working together. So thanks for that. And that was great baseline information for us to have. So let's now kind of turn to get your points of view on a more technology focused area and the opening up of distribution platforms and players of across our industry. So, for example, will we continue to see the ongoing influx of insurtechs? Will a more clear line form between the IA-friendly innovators and others, or will the evolution be driven by the line of business needs and focus that way? Reid, you've got a solid stake in the ground on this with your background. Let's start with you.
Yeah, so everybody is opening up. I mean, that's happening. All the major technology platforms that are out there, I'm not going to name names, are all going through some sort of transformation to open things up.
Right.
We're doing the same at Ivans, same kind of thing. But if you open up the various platforms and then you have connectivity between them, and you have a centralized hub of connectivity, it allows insurtechs to emerge. And I talk about this all the time. It's not even ones that we're thinking about. It could be people that are coming from other industries and whatnot to solve a lot of these problems within our industry. Because the problem is it's, I always talk about connectivity because that's kind of my world, really is my world. But it's the reason why I'm here at Ivans, is because connectivity is so important for innovation, right? Because if you don't have to worry about that, build that, have that, and then these other platforms are open that you can tap into, I can focus on building real products, be point solutions, platforms, whatever it may be, that really solve a need. And what are those needs? They're needs across the entire industry to help all of our companies be much more efficient, whatever that may be. So we're all in enterprise technology technically, and all enterprise technology, if you buy it, should have some sort of ROI on it, return on investment. It's not just to buy to have the shiny object. I think a lot of that's been going on for a lot of years in this industry. Things like people talk about AI and all of this stuff and all these, bells and whistles and shiny things and blah, blah, blah. But do those really help with what we're doing day to day? And you can't have AI without connectivity, big data, all of these types of things. So it's almost like we are kidding ourselves. But now, again, going back to what we were talking about earlier, with the pandemic and just kind of forcing everybody's hand that this is not a nice to have anymore, it's a have to have, it's going to enable all of this to really come true once and for all. And so I know all my friends and family in this industry, that's what everybody's after. Everybody's marching towards this. So it's a good time. It's a good place to be. And everything you guys are doing, Ron, at ACT and everything, I mean, everybody is all marching towards this. So yes, it is happening. I know Applied for a fact is doing it as one. I mean, they have all Epic transformation where they're opening it up. They're opening up APIs, the whole nine, when frankly, that wasn't a thing in the past, right? And it's scary for a lot of people and a lot of these big vendors to go through that. Like, we open up, what does that mean, right? But it is the way of the future. So I know I went off a little bit of tangent there, but
It's okay. I take tangent as passion, and I know that you're a passionate person. As is Chris. Chris, I know that you have that you have solid interaction in this, given all of the interviews, all of the podcasts that you've done. What's your lens on where we're going with the influx of InsurTechs and what it can mean for us? Along the same lines as Reid, a little different lens. What's yours?
Can both be true? Yeah. I completely agree, I think, with the premise of the question and where Reid went. I mean, we're going to continue to see more and more tech opportunities. Certainly, there's a lot of capital pointed at our industry. I think we've now been exposed, that done well, especially on the broker or agency side. There's some real money to be made. So being able to get in and solve problems for them is very real. But connectivity is huge. Every carrier is focused on, everybody's focused on it. But I think about it through maybe a different lens on the carrier side. And, that is, we're all striving for a single view of the customer. And so if we start with our why, what's the most important thing? And that's to provide the best experience for the customer when they need to interact with us. And I think that's key to solve for. So simplifying that, sharing data, continuity of data and view across all the disparate platforms that all the different firms that are involved in a transaction have to be involved with is key. So organizations that are really focused in with that point of view, with a very genuine and authentic why, really trying to solve a real problem, are the ones that have sustained and are the ones that are still here. The others that weren't, that looked at it as a, chasing a buck, trying to quick flip some venture money, they might have, but they weren't really here solving the problem. And so there's some really great stories out there. I think, as somebody in my seat, and I'm sure there are a lot of folks out there listening that can relate to this, your LinkedIn inbox, it's a daily feed of new tech startups that want to get plugged in. So kind of filtering through those is important. And I give them all credit. They all have, let me rephrase that. The vast majority have actually pinpointed a very real source of friction or pain at some point in the process. But the way I think about it is, and the way carriers have to think about it, and even agents or brokers that are out there looking to invest, is the cost of the solution commensurate with really the value of the benefit? So, Reid mentioned it as an ROI, but if I have to spend $500,000 on a solution that has very marginal net benefit in an entire value chain for the customer experience, it doesn't make economic sense to participate. And so those that get the economics right and really understand the value they bring at the point in the value chain they're trying to be a solution, there's something really there that's magical, and we're all thinking about it. So I could go off on another tangent. There's a whole contractual part of it too. So opening up our world to everybody in a world, we'll talk about this, I think, around data and information security.
Yes, we will.
There is a real balance there between, just because we can technically do business together, there's a question of, do we want to do business together? There's brand reputation, there's alignment of values, and there's the way two firms think about the protection and the mutual responsibility they have to each other when they're sharing data.
And I think what we all realize is, while it's all doable, does it make sense for all the stakeholders who are working together? So thanks for that, Chris. Brady, from your industry association lens, I assume, we haven't talked about this, but I assume you're being approached from a specialty lines and other aspects by InsurTechs. Are you seeing a lot of those inroads? Are you seeing it continue?
Oh, absolutely. We host an InsurTech conference now every spring, and
Yes.
last year's, it wasn't in person, unfortunately. We're all dealing with that, but we had our largest audience in a virtual platform that was the most engaging we've had. So there's no doubt activity is on the rise in our segment as well.
And Chris just mentioned data. So, a lot of our discussions across the board, whether it's within the session or other discussions we have, they center around data. And of course, the ever-growing risk that agencies, carriers, tech providers face in the areas of data info, security, privacy, and ransom. So I'd like to ask each of you to respond. First, I'm going to ask Chris, then Brady, then Reid. What are the priorities for each of you in this area? So Chris, I'll pick on you first.
I mean, the priority is protecting the identity and the PII of our customers. And there's so much, our industry possesses so much information in so many different places that is protected so differently or not at all based on where it sits, that we're a prime target. And our company has invested, our information security team is almost as big as our distribution management team, if that tells you the priority a firm like us has on it. And the amount of technology they have built to track and regulate and understand who's accessing our systems to do what time of day, from where, and all of those types of things is phenomenal. And over the last couple of years, I've personally felt there is an intersection. I don't want to call it a crash course, because that's more hyperbolic than it needs to be, but all of this connectivity and all of the things that are out there to create a more robust customer experience, running on its own lane next to a lane where 50 state regulation, Brady mentioned that, GDPR,
Right.
California, New York, incredible regulation and obligation for carriers and independent agencies, now treating each other like third parties in a world where that really hadn't been the case in the past. So it's a really real focus, and it's almost an existential type threat to our industry. And so it can and has put small independent agencies and small businesses out of business. And it's something that large carriers need to be thinking about, and we are thinking a great deal about. And not only just what we're doing, but trying to facilitate a dialogue. So whether it's on our own podcast, opportunities like this, quite candidly, we're announcing, this is something our agencies are going through. We're baking obligations and provisions into our actual agency agreement.
Yes.
And I know other carriers are. We're talking to the state and national Big I about those types of things. But it's a very real thing. It's not sexy. It's not romantic. But it's one of the larger risks our industry has right now.
And it's where we all live now. You'd ask a CEO, a CTO, CIO 5, 7 or more years ago, what keeps you up at night? You would have gotten an entirely different response. And now it's a part of everything we think about and do and plan for, and our infrastructure. So Brady, from your lens, I know Chris mentioned GDPR, NAIC, New York DFS, the emerging California Online Protection Acts, and those that are emerging that look like that. Can you give us a little bit of a lens on what you're seeing, what you're dealing with when it comes to the data in your realm? Is it all around state actions that are taking place, the overall regulatory responses? Is it everything?
Yeah, it's a little bit of everything. I mean, our key priority is to keep folks informed on and educated on, what the states are doing and how they can best comply with all of these state laws. Chris mentioned it. The New York law was the first one to pass back in early 17. That was the most comprehensive, I would say, of the state's cybersecurity specific regulations. And it was a tall order to be the first one. The NAIC passed their bill soon thereafter. And their model law, I should say.
The model law, yes.
Yeah. And, 18 states have enacted some form of that since that time. So, our mission is really about making sure members have access to those resources, information available from the NAIC's website, our website, again, to make sure everyone's informed on which states are doing what things and how do we stay on top of it and comply with it.
And we share that. Brady, it's almost a full-time job, just the advocacy, the clarity, making sure that you're staying on top of it. It's no small task. So thank you for that.
You too.
Reid, I'll turn it to you. You've got a little different lens in the intersection of data and everything, and there's such complexities to that. So can you share with us from your aspect, what all of this looks like around data information security, privacy, ransomware, all of that?
Yeah, I mean, look, security is top priority for us. We have a lot of data, a lot of connectivity that flows through our pipes. It's kind of interesting though. It's funny, even just talking about this topic, like a lot of us on this call, all of us on this call, we sit on a lot of panels and talk a lot about a lot of things, but people don't talk about security much. And that it's it's good to be talking about it, right? It's kind of crazy that cyber is still specialty, right? Like, isn't that kind of a main line of business these days? It's becoming more and more like every company. But I feel like our industry hasn't been hit that much like other industries, but now we're seeing it. There's been a lot of news about some bigger organizations that have taken some big hits here. And so it's a big conversation. Like Chris said, it's not sexy. And look, it's not fun to really invest in security, but look what happens when you don't. And it's a real problem. And I'll tell you, it's interesting, since a lot of this is starting to happen, at the top and all over the place, and we're hearing a lot about it, because you're right, everybody's right. There's all this connectivity all over the place. There's data everywhere. It's even stored everywhere. Brokers, insurers, everybody in between has to think about where that data is being stored and what's happening there. And you need to protect yourselves. And I don't know if people have really thought that way as much in the past, but what's interesting is now we're having a lot of conversation with carriers at Ivans around, hey, can you help us even in this? You guys have a lot of data. Can you hold it? Can you store it? Like a lot of, redundancy type stuff and things like that. So the conversations now are happening that much more, which is a really, really good thing. But yeah, I mean, if you're in technology, your solution has to be secure. I mean, you need to invest in, in an InfoSec department, like literally. And you need to start thinking about this stuff. It's not all about, solving those workflow issues and organizational efficiency and driving additional bottom line. You got to kind of invest in your own insurance policy as well, not just buying a cyber policy, but you need to be smart about it, because it can really hurt in a major way, like we've seen recently in some organizations. So it's scary. It is scary. And I will say too, I agree, we kind of know it, we talk about it, but we have to realize that the data that we have in this industry is some of the most powerful data in the world.
It absolutely is.
It really is. If you think about consumer data, that Google and others have, it's not as powerful as insurance information. And so, yes, it's very important for us. It's good we're having this conversation. It's good to come up, and I hope it continues to come up in future panels, because people need to get really serious about it. Not that they aren't, but you know what I mean.
Yeah.
Um,
Continued focus. And if I have anything to say about it, absolutely, because my coworker, Ginny, who introduced us, knows that it's always top of mind with me. And this is a post-pandemic discussion, and some might be thinking, oh, they're focusing on cyber. Well, that's where it's going. As of this year, or as of the second half of this year, based on a risk-based security report, we are now the second highest targeted industry of all industries. 5 years ago, we were way down there. Now we're just under 17% of all data breaches. And that's huge when you talk about the volume. So we have to keep talking about it. So thank you for that. So
Ron, if I could just jump in like 30
Please.
seconds too. You mentioned cyber a little bit and the fact that it should be more mainstream. And I guess a couple of things there. That's an ounce of prevention versus a pound of cure. So when we have the conversation, we talk getting on the front side even about preventing. So using MFA, encrypted communications, a whole 9 yards, some real basic stuff. But what we're starting to see in the world too is cyber insurance is going to be harder and harder to buy. So think about something that everybody on the phone's been experienced to is water backup. Used to be everybody could buy $10,000 of water backup and we all paid the same. And then the actuaries got involved and realized that, hey, different attributes about the customer, where you live, the type of home, all these types of things. So different pricing, different rating models, different availability. That's what will start to occur, at least we think is going to start occurring with cyber. So it might not even be the safety net that everybody thinks it is today, because it's going to be harder to get, different terms and conditions, and greater cost.
And we're seeing a lot of conversation on that right now, Chris. So thanks for bringing that to the fore. So we've rounded the home corner and running down the stretch now. So let's wrap it up with this. Let's re-elevate what we kind of described as a primary focus of this session. What possibilities moving into the future resonate or energize with you the most? And we'll ask you to keep it as concise as possible, but tell us, what moving into the future, looking at what we have done, what we were forced through, what we may have been ready for in many cases to execute on, and we all came together. But what possibilities moving into the future resonate or energize you the most? So Brady, I'll start with you.
What energizes me the most? I would say, I've talked a lot about specifically our segment, the wholesale, specialty, and surplus line segment. I'm energized by the growth. Last month, AM Best published their annual report on our segment. They noted record-setting premium of $66.1 billion again in 2020. That's a near 18% increase from 2019, and the largest increase we've seen since the timeframe 2001 to 2003. So growth is looking very, very strong. We have 15 states that track and report surplus lines premium across the country, and through the middle of 2021, they're reporting 22% growth. So, I think the fact that what we've learned over the past 18 months, we're probably more focused on risk and risk assessment, risk management. And I think we're seeing that as the industry provides more solutions and as premium is on the rise.
Great. So Chris, you're a guy who is passionate, gets energized. What about moving into the future resonates most or energizes you the most?
And growth is an awesome one. Unique opportunities. I think if you use what Kiyosaki's cash flow quadrant, he talked about this concept of anytime there's these seismic shifts in the world or the economy, it really just redirects where the assets lie. So there's something about that, right? As we start to think about risk differently and how we solve for that. But something that I'm intrigued about, and it's just a conversation starter in our industry, when we think about technology, which is what this is all about, direct connectivity, the ability to drive consumer experience in so many different ways. I just wonder if there are role definition changes in the role that the agency, the carrier, who's underwriting, the sophistication of pricing, where does the front line take place on service, first notice of loss, these types of things are starting to occur now. We've seen enough data to show that a first notice of loss model that goes directly to the carrier for small and certain types of claims yields measurable improvement in NPS. So those types of, there's a role for everybody, right? Being able to be a huge value provider, trusted advisor, provide insight and risk management to the customer. I think there's a role for everybody there, but how the entire continuum of the insurance process is sliced and diced over time might look different. We might all be
I
doing
think that's
something
great to
different.
focus on and keep in mind, and as we figure out what the correct evolution needs to be. So Reid, you're last up. As a guy who I know has a lot of passion for a lot of things, but is also a self-described serial entrepreneur, what does this look like in your mind?
I mean, really, connectivity. If we solve connectivity, it breeds innovation. And that is really exciting for me. And it's not just connectivity, it's connectivity and standardization. I'll say that, you know? But it's funny because Ivans and Accord was founded almost 40 years ago, right? And so what excites me is finishing what we started. And everything that's going to come out of that and around that, once that's solved, is really exciting. And what's to come, to be determined, right? We know with connectivity, I could list 1,000 things right off the top of my head, but we know all those things. But what about the things we don't know about? I think it's really, really cool. And so it's awesome to be a part of this. And at this time within our industry where these things are actually happening, it's not just talk. It's not water cooler conversation anymore. It's, you know, the pandemic, like Chris said, it's kind of shifted that, right? And I totally agree. The roles will change in the future. People are already starting to talk about that, especially on the distribution side. And you know, right now we look at problems in kind of revenue generating issues, submission flow, things like that, right? Quoting, stuff like that. But it'll quickly move into servicing, customer experience, whole nine. And, you know, and then, you know, all of a sudden you're going to have agencies like in a technology company that have customer success, right? And all kinds of, they have that, and you can say, oh, well, that's what we do and whatever, but just different lens, different way of looking at these things, you know? And so that's exciting, but like you said, super quick, simple. I'm excited about solving connectivity because it breeds innovation 100%. And that's cool.
Love it. And what I hear through this and what I say and talk about in other conversations, yes, we've come through this difficult, sometimes scary time, but I feel like there's never been a more exciting time to be in this distribution channel, in this industry, with more opportunities. So at this point, we're going to wrap the session and head towards our Q&A. But before I do, I want to take a moment to thank you three for your insights so far. Brady, Chris, and Reid, thank you so much for being a part of this panel. We really appreciate what you've done here today.
Thanks for having us.
Absolutely, our pleasure.
All right, so at this point, we're going to turn to Q&A and answering some of the questions that you, the attendees, have been submitting using your Q&A function at the bottom of your screen. And let's hit it. Okay. Thanks again, guys. So we've got, I anticipated we were going to get a fair amount of questions here. We got a fair amount of questions, which is a good thing. Everybody watching, we're not going to be able to get through all of them. This was a little longer session. This ACT conference or ACT Tech Summit has consecutive sessions, not concurrent. So the beauty of that is you don't have to try to pick between two sessions that are running at the same time, but what comes out of that is we're tied to a clock. So we've got a little over 11 minutes, but we're going to try and get done before that. And guys, what I'm going to do is try and combine a couple of the questions and ask you to be as succinct as possible. I've captured all the questions, so we'll work after the conference to get back to folks. So the first thing, this is a two-parter that I'm putting together. Do you all foresee tech-oriented risks, specifically cyber, becoming mandatory coverage for a business in the future? And the second part of that is, and this is kind of a loaded question, does our industry understand well enough the magnitude of the threat that cyber is to price it appropriately as a line of business? So one, do you see cyber and things like that becoming mandatory? Two, do we understand it enough to price it well? Who wants to start? Chris, you want to try that? See what the other guys say?
Brady may have some insights from his world too, because I think in the comments, Reid asked why cyber was still more a surplus lines product and not mainstream, and that may be the bullet point that answers the question. I think it's still an incredibly emerging risk. I think it becomes harder to buy because it's harder to price. Terms and conditions inside coverage forms are likely ripe for strong evolution as we learn more here. But mandatory for all businesses? Well, I don't know. I mean, I think that becomes an E&O risk for a carrier or for an agent or a broker in this space. But it certainly seems like it starts to sit at the same level of recommendation as things like water backup on the personal line side or an umbrella.
Brady, your thought?
I tend to agree with Chris. I'm not sure I would see this becoming a mandatory cover. So few covers really are a mandatory cover. I would compare it to things like terrorism coverage that, the industry has to make a mandatory offer of, but nobody has the mandatory purchase requirement. So I don't see it becoming mandatory, but I mean, we have talked in this session about how, I think Reid said this, it's interesting that cyber is still considered an emerging risk, but it's an evolving risk. I mean, I think it just the types of cyber issues that we all face evolve dramatically from time to time. And so, Chris, you're right. A lot of that still is underwritten in the E&S segment. I think it will continue to for some time. But mandatory cover, I don't foresee that.
All right.
I would agree with Chris and Brady on that. I don't foresee it mandatory, but I like what Brady said, how he worded it. It's evolving, right? It really is, but it's because it's important. I mean, it really, we need this stuff. But yeah.
So Reid, as long as we're with you, we got a really loaded question, and I don't know that the attendee expects any specific companies to be called out, but the question was, are there any insurtech enterprises that are actually profitable on an underwriting level?
I don't know the answer to that question, but not a whole lot, really, from what I understand. But I don't know. I mean, Chris, Brady, maybe you guys can add a little color to that, but
that's definitely a loaded question. And just coming back from InsureTech Connect, that was kind of a question that was making the rounds during that, right, Chris?
It was, and I kind of have a mantra where I try not to speak too much of direct competitors in the space, but there are those who do, and I think it's relatively a common conversation that it's hard to make money as a carrier, especially just a couple of years in. Right. And it is a whole other thread of dialogue, but ultimately bearing the risk and trying to make financial decisions that can support 50 to 60 some odd cents of every dollar premium collected to pay claims and support that is maybe a longer game than some would have expected.
I'll say this: most startups and new companies are not profitable. We'll say that.
Not for the first X years, at least.
That's right. To be fair.
Yeah. So here's one, and this goes a little wider than cyber, and we've got, it looks like 1 minute before we have to wrap it up, and I apologize to the panelists. As an agency owner, where would you suggest owners focus or concentrate their efforts as far as their agency focus on tech? And this goes to a little higher level question on maybe tech stack, which we've got a session on later. Is at the foundational level? Quick answer, Reid, Chris, and Brady. Foundational level, expanding to having really great CX. What do you think?
I would start foundational. I mean, you need something, right, to get going on. And then I would take that foundational piece and then add in some additional layers, if you will, kind of conceptualizing this, additional layers of things that actually drive real value back to the business.
Right.
And I think that's the biggest thing. I always go off on this tangent, and I won't because we don't have a lot of time, but like focus on things that drive real value to your agency. You're not just a shiny object. That stuff's cool. You can get there. But listen, you can't drive a Ferrari if you don't know how to drive a Kia, right? So, I mean, you can, but good things aren't going to happen, right?
Right.
Waste of money.
Brady, same for you.
Same for me. Reid said it very well.
All right, Chris, anything else to add at the end there?
I would just challenge or encourage people to start at your own strategic roadmap. You know, so not every tech solution solves every agency's problem. And if you're a county seat, privately held, service-oriented agency, there's nothing wrong with that, but it is an entirely different tech decision than if you want to be a digital SEO, high-flow, sales-oriented shop. Two very different models. Place for both of you in today's ecosystem. Tech very much differs. Start there.
All right, unfortunately, we have to drop for the next session coming up at the top of the hour here. Reid, Brady, Chris, thank you again so much for your time today. Greatly appreciated. And for those attending, you feel free to flip to the next session, which is going to be what you need to know about managed services providers all through the afternoon as well. Everyone, thanks so much. Take care.
Thanks, Ron.
Yeah, thanks for
guys.
having me.